Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. So the volleys back and forth on the trade front continue, KG. So now it's about cooking oil. Earlier last week, I'm like, was it earlier this week or last week when it was about rare earth materials rather. So where do things stand now?
Yeah, so this is actually a very unique, comment that came from President Trump. We have to kind of clarify exactly what he's kind of talking about here. It's used cooking oil that China has already spent, and now they're sending it over to the United States, and we utilize that within biodiesel and other renewable fuels. And it's a very small part of our overall import business, just in general. You're looking at around $1.1 billion in total imports for this used cooking oil in 2024 here. So this is more symbolic in nature than actually going to impact the Chinese economy or even the U.S. economy for that matter. And in fact, if you actually look earlier this year, the Trump administration already gave a lot of passes, if you will, or exemptions for a lot of these refiners to add this cooking oil to biodiesel and other renewable fuels here. So they're already not really a fan of the overall business itself. It's more of green energy tech, if you will. And so this is more, once again, symbolic in nature, not really going to break down anything materially when you're looking at GDP for the U.S. or for China here. And we'll see if this is actually going to give maybe a little bit of an opening in order to try to calm some of these tensions. We also see these port fees going into effect as well. Obviously, we're going to be charging China ships coming and docking at U.S. ports. We're going to be charging them a significant amount of money. China is also doing the same. And it sounds like early reports, we do have around 2 ships that were bound for China that are kind of diverting because they don't want to pay that China port fee as well. So interesting tit for tat, if you will. Obviously, the market's still kind of focusing on it, but we have been trying to buy up these dips, and I think that's actually a little bit encouraging if you're looking at the price action for the E-mini S&P futures. We're above that 20-day moving average, a very key area of resistance the last couple of days.
Okay, yeah, I know that you've been paying close attention to that and seeing whether we hold on to that level. So it's so funny when you make the point about the ships being diverted. There's the question going into all of this year, would there be a remaking of, kind of what trading blocks look like? And I wonder if that will end up happening. It seems like it will also depend on what we ultimately get beyond the truce that we have between the U.S. and China. Let's talk semiconductors, that space a little bit. You got ASML, the Dutch semiconductor equipment maker, out with its results this morning. They're saying by 2026, sales won't fall below 2025, even though they did flag a drop in China demand. What are some of your takeaways here?
Yeah, at least the guidance that they provided, at least the near-term guidance, is trying to provide a little bit of a backstop for the concerns around China sales. Obviously, that's been impacting their business, and a significant portion of their overall revenue stream, if you're looking at 2024, did go to China. Now, the company did report around $6.28 billion, the equivalent of, in Q3 orders, and that's obviously driven by artificial intelligence. And they also have some other tailwinds as well. The smartphone business is starting to see a potential refresh cycle, which is why we are seeing Apple shares also climbing to the upside here, and they are pretty much keeping their 2026 guidance, at least for now, intact. We will get an updated guidance from ASML in January of 2026, so we'll be mindful of that. But basically, the street is appreciative of the fact that maybe they were already really lowballing their guidance moving forward, really accepting the fact that China is going to be weak for a while because of these tariffs, as well as some other export bans and things of that nature here. But once again, they are seeing a little bit of a bump to the upside. They do have some secular tailwinds right now for them, and maybe in 2026 or in 2027, which a lot of analysts are focusing on, they will see an uptick in demand across the board for each business segment within their organization.
Okay, the ADR higher in the pre-market, up more than 4%. Another stock that's moving higher in the pre-market, Morgan Stanley. It seems like the theme for the banks and the financial services has just been strength and strength to come. Recap some of the numbers. I know they just came out a little bit more than a half hour ago. Your take on Morgan Stanley's earnings.
Yeah, so we did see revenue coming in at $18.22 billion. Street was looking for around 16.7, give or take. And then you're looking at the adjusted earnings per share coming in at $2.80. Street was looking for around $2.10. The return on tangible common equity, that's going to be a very popular metric for a lot of these financial institutions. That came in at 23.5%. That's actually really healthy. And they are seeing their investment banking business obviously grow at an exponential rate compared to the Street's expectations. Let's say that here. They actually did see revenue coming in at $2.11 billion. M&A activity, IPO activity is increasing, and they're also talking about lighter regulations when it comes to the M&A space just in general, which is also driving their strong performance. So we have seen earnings coming out from not only Morgan Stanley, but Bank of America, Citi, and others that did show some pretty decent strength. We are not seeing net charge-off rates aggressively moving to the upside across the board for their business. You are seeing maybe some pockets of weakness when it comes to retail banking, especially when you're looking at the Citi numbers. But overall, this is actually a really decent report. We are seeing the shares up around 3% to start off today's trading. Let's see if it's going to be able to hold. This is actually really decent price action for the financials post earnings. We did see some weakness yesterday, but we did see, once again, some pretty good fundamental results coming out of the majors over the last 24 hours.
It's interesting to see this, and especially with the prior quarter, one of the themes has been the IPO activity. Later this hour, we're going to talk to Jim Neeson of Connor Group, who is, they're one of those companies that helps bring companies to the public market. And so they've seen strength, but there's obviously also going to be some impact because of the government shutdown, because that affects the SEC's pace. I mean, more than 90% of the SEC staff is furloughed right now. So strong activity from the banks. Any final take on Morgan Stanley before we get to your levels to watch on the S&P 500 today?
Yeah, I don't think the net charge-off rates for a lot of these institutions is really concerning the street. Once again, you are seeing some pockets of weakness when you're looking at the Citi earnings and their balance sheet when it comes to the U.S. private banking segment. But for Morgan Stanley, they're more of an M&A activity type of bank, investment bank, and that has been showing a lot of strength. And as yields continue to move to the downside, that might take some capital off the sidelines in those money markets from a lot of these corporations, put it into these public markets, or start doing some capital deals, and that'll be a benefit for Morgan Stanley in the long term here.
Okay, and KG, your viewers who tune in for your levels, what are your levels on the S&P 500 to the up and the downside?
Yeah, to the upside, 67.25. To the downside, 66.40. We're implying around a 1.22% move when you're looking at the VIX. And Diane, once again, the technical nature, technical action right now is kind of pushing us a little bit higher. I would not be surprised if we hit all-time highs in the next couple of days.
Okay, interesting. All right, that is Kevin Green, Senior Markets Correspondent here on Schwab Network. Thanks a ton, KG, for the breakdown there.